And a very good morning to you, and welcome to the pre-market rundown for TriggerCharts on this wonderful Friday, the last Friday of the month, June 25th, 2021, in the heart of summer right now. I'm Andrew Horowitz. I'm the co-founder of TriggerCharts, and we got to make sure to have these important disclosures up there before we begin any discussion of any investment. Of course, we know that investing involves substantial risk. Past performance is not a guarantee of future results, and of course, we want you to make sure to consider this for educational purposes only. That's what we're doing here. And of course, use your best judgment when investing. You could lose all part of investing. It's a tricky game. Bottom line is that we are here to try to make some money, and that's what we're talking about, particularly related to the TriggerCharts Commander series, our altimeter, autopilot, radar, multi-time frame indications, as well as aileron, the things that really you can put together for higher confidence trading, making sure that you're not sitting there going, oh man, I made that stupid mistake again. How many of you have done that, right? We're trading all day, we're doing our thing, we're like, okay, I'm doing this, I know I shouldn't. Oh man, why'd I do that? That was stupid. Well, what we have and the tools that we built were all designed to stop you from saying that, for keeping you on the right side of the trade, the bias, whether we say something like, well, below this line, and look at the chart on the right, for example, I think that's a good example right here. If we are looking at a level and a very wide berth here, a very wide range, from about 36 to about 38, this is the XLF, the S&P Select Financial Spiders. We say, hey, below green, do not be long. Above red, do not be short. If, in fact, you utilize that within any time frame, that can keep you from doing stupid things, which a lot of us do. Let's be honest. We just kind of like, oh, I really want to do that, right? I mean, come on. I know I can't see you. I know you're shaking your head. Yep, I've done it. So the whole part of investing is, of course, to make good decisions, but I think equally as important is to stay away from making bad decisions, particularly when we're trading. When I talk about trading, how do I define that? Well, we're looking at intraday, we're looking at multi-day swings, we're looking at scalps. We're looking at, just a quick 1-2 in out, maybe on a time frame of 60 minutes or maybe 240 for what we like for, let's say, commodities. And daily for those that you want to do some swing trades. Now, everything that we look at, or a lot of things, not everything, everything that we look at primarily is going to be dealt with on a daily chart. Why? Well, it really doesn't matter. A chart's a chart. We're time frame agnostic. But it's important to kind of keep a little bit of an understanding that all the rules that we talk about apply to all charts and all time frames. And you have to understand and respect those. So when we're talking about, hey, don't be long under a certain level, don't be short above a certain level, there's reasons for that. And again, just keeping out of trouble could be a really big part of keeping your money and your sanity. All right, let's get into some of the things that I'm talking about, because what we do on Fridays is we talk about the overriding issues that are really facing markets right now, what investors are most importantly looking at, and what they're focusing on. Like last night, for example, we saw that the Fed said, hey, you know what, all banks, your balance sheet's looking good. Everything is looking fine. We did these incredible stress tests looking at, 10.5% unemployment by 2022 and all these different things that could happen that would be very difficult on a bank. And you all passed. Just to let you know, you all passed. And that's sparking up the idea that there will be a significant amount of opportunity for money to be given back in the form of dividends and possibly even share buybacks. So what we're seeing there, and on the news of Nike's absolutely stellar earnings report, blowing out every metric. Seeing a Dow Jones futures up about 163 going into this morning. The SPOO's up 8. NASDAQ lagging a little bit there. Bitcoin taking it on the chin a little bit, which is kind of interesting. Not much inflation and all that going on. Not much to fear. So maybe that's happening. Plus, of course, what all that we've been seeing and hearing about with China and the mining companies, or the Bitcoin miners. But right now we're seeing a big reversal from what we saw last week. The concern about, hey, there's a lack of inflation and the yield curve is compressing and it's getting a lot more flattening, or we're seeing a flattening of the yield curve. 2 10s, The 2 years and the 10 years, if you ever heard that, are starting to come together a little bit. Well, that's not usually really good for the banks. And you can see that on the right-hand chart right here, the XLF. So this massive, look at this move, right? From 38.60 down to 35. That's a big 10% correction, give or take, right there. In the last few days, we're seeing it rise up pretty nicely. Got this short call right here, right now in the negative. This is kind of a rare sight to see because we got a new level. Probably going to be an out right here. Let's see, where is this trading right now? 36.72. 36.68. Yeah, so you'll be out of this trade for a loss of, I don't know, 50 cents or something like that if you held it throughout this entire range of the short side. Remember, very difficult to short right now in this market environment where everything just goes up no matter what it is. You know, you can look at stocks that missed earnings terribly and they go down, they get smashed, and then they start rising back up. A lot of liquidity in the system. That's what this is all about. Now, what happened last week? Let's talk about that. That's really important. Those big moves, those big swings that we saw last week. I think really it was a lot of it was based on the Fed. Markets are at an interesting point right now. We're in between where earnings season is. We're in the summer where theoretically we have lower volumes. Liquidity is there, but the question was, hey, is liquidity going to be sucked out of the market? With the Fed talking about more inflation, that's what happened last week. On Wednesday, the FOMC came in and said, you know, and Powell, we are seeing some inflation. You know, we're increasing our inflation expectations from 2.4% to 3.4% into 2022 and 23. Okay, wait a minute, hold it. That's a big difference. That's not just like a little small tick. We're not talking about, you know, just 10 basis points here. We're talking about a full 40% increase in the inflation expectations, meaning that, you know, if they have that high of an expectation of inflation, are they going to pull back liquidity? They did some technical adjustments, a few things, and that really spooked markets pretty well. Well, of course, here we are 1 week later. We knew this was going to happen. There's no question about this. This was baked into the cake, that they walked it back. If the markets didn't like what they were doing, if the bond markets got a little bit squirrely, we saw that flattening of the yield curve, and it didn't work out well. Well, you know what? We'll have the Fed parade come out and walk this all back, and it started already on Monday. Friday was a rough day last week, where we saw Bullard come out and say, yeah, there is inflation, and he was a little bit more hawkish. Well, that kind of spooked markets. But then by Monday and over the weekend, we had all these nice fellas and ladies coming out and saying, don't worry about it. You know, we don't see any rate hikes anytime soon. So Yellen even came out in congressional testimony and said, hey, you know what? Inflation looks like it's transitory. Bank of America out today with some pretty good numbers and some information, as opposed to when the Fed brings you information, they just talk about it. When the analysts come out, they try to give you some backup. Bank of America said, hey, you know what? We are in 4 or 5 years worth of higher prices moving forward, and they give you all sorts of backup. A very good report today, if you can find it, on inflation and where their expectations are, which flies right in the face of what's essentially been talked about by the Fed parade, not so much by Powell, who's a little bit more hawkish, and, of course, Yellen, who is always talking dovishly. But investors did respond to the sell-off, right? Rushed into equities again, and we saw this big move right on the heels of what happened on Friday, a reversal. If you look at the Dow Jones Industrial Average, let's kind of bring this up real quickly. You know, this massive move lower right here. You know, you can see that on this chart very easily, right? This massive move lower last week, and this big drop gap down, and then this big gap up day to fill the gap back up. And where are we? We're kind of right above that, and right now we're going to be all the way up here somewhere above that level. So really the opportunity to short this, fleeting at best. You get into a short somewhere about 340 if you can grab it before it dropped and cratered out, which is probably a little bit difficult, but you would have grabbed it on the alert, which is yellow. Yellow means an alert. In this case, it was a short alert. You grabbed it right here. Day later, so you're at 340. Day later, 335. You cover your position. Again, in the world of shorting right now, very difficult to deal with because of what we're seeing with the excess liquidity in the markets. Small caps leading the way after a very bad week, and big is buying back into the NASDAQ. We're seeing what I'm calling a rotation of the rotation, or maybe an unrotation of the rotation, an unmovement, a flattening, an uncoiling. We're seeing NASDAQ, again, week today with the NASDAQ pretty strong. This is a lot of Nike right in there, I do believe. We could pull that up real quickly. Where's Nike right this morning? And some of the banks. Yeah, Nike at 14% is probably helping out pretty darn well for the Dow Jones. We have a summer cycle, which is usually a buy signal with low volume, with not a lot happening, but all the lower volumes come into July. We have a big Russell rebalance today. There'll be a lot of volatility today towards the end of the day, in my opinion. Last Friday saw another big rebalance and quad witching, so that was interesting. We got a short squeeze watch overall. I mean, that's kind of what's been going on. I think that's what traders are looking for. So what you want to find maybe is some of those stocks that have been down and beaten down, but holding on a level, right, where they have significant support and they also have some high short interest and maybe low volume. That's what's been moving things pretty well. And we can go through some of those. And I've been talking about those pretty well over the last few weeks. We talked about many of those names, and they have been performing pretty well. Stimulus. Well, the word out, there's a rumor, and maybe now it's been confirmed, I suppose, that the Biden administration struck a bipartisan deal on infrastructure. I'm not buying it. I'm not buying it till the fat lady sings here, because there's also a reconciliation bill for social infrastructure, I think they're calling it, for I don't even know how many trillion that's going on in the background. So that may get some attention of the Republicans and saying, hey, wait a minute, we agreed to this, but what are you doing here? So infrastructure plays on this rumor. Yesterday moved up. We saw the Caterpillars. We saw the concrete companies, the steel companies, rental companies that are in the area of machinery move up yesterday. So we're talking about a $1.2 billion infrastructure bill. But what's interesting about this is, look right here, we saw existing funding and tougher IRA sanctions. IRS sanctions are on higher earners. Interesting. Economics, we saw weak new home sales this week. We saw a strong GDP, 6.4, which was expected. A lot of things coming in as expected. Saw some reasonably strong retail sales recently. However, the IS ratio, the inventory to sales ratio, dropping. What that means is when you see it moving lower, the first is the inventory. Inventories are moving lower. So what you have going on right now is sales outstripping supply, something that we knew that was happening. We see that buyers are buying, consumers are consuming, and we are seeing that is why, not only due to supply chain constraints and issues related there, that we are seeing that there is a major demand factor that is going on, and manufacturers are not able to keep up, especially with this what they've done over the last year is have a just-in-time concept when it comes to the overall manufacturing and delivery to the retail establishments. And that's not working out so well right now on this reopen post the pandemic. What else we got there? Next week, we have the Case-Shiller Housing Price Index, Consumer Confidence Employment Report, and we have ISM Manufacturing. Got some fat finger typos going on today. It's ISM Manufacturing. We're going to look at some stocks today. Clove, one of the darling names right now in the area of short squeezes. The trade desk came out yesterday. Out of the gates pretty strong, as Google announced that they're going to postpone some of their cookie policies till 2023. We saw Rite Aid drop on some kind of, this is a serial bad stock, it seems. Space, as I call it. Well, there was a big announcement today that they got approval by the FAA to send individuals to space. We got some Up Finance. This is the Robinhood of China, and a few other names to talk about on that. So first, let's get to what we're looking at right here, and we're going to go through your names first. I got some things. Please put it into the chat over here. Did I spell it right? No, here. Put it here. See the chat just popped up, something blinking on your screen. If you have any stock symbols you want us to look at it right there. Put it inside of the chat, and we'll talk about it. By the way, just to mention, if you didn't know this, I'm telling you right now, anyone who subscribes to a paid subscription to the TriggerCharts Commander Series over on the TradeStation Trading App Store, new subscribers will get a 4-hour, 3-part course that is evergreen. It really doesn't matter when we did it, because all the core trading principles valued at $199 that people pay for, you'll get that for free. Just send in an email to support@triggercharts.com once you get that done. All right, where are we here? Let's take a look at some of your stocks first. Let's see. We got CrowdStrike. I think I'm hitting all-time highs. Yep, hitting all-time highs. Nothing bad about this chart. I mean, a little bumpy right here. This is a daily chart again. Let's make sure this daily chart, and this is a 30-minute chart. On the top here, we have what's called our one-of-a-kind, never seen by anybody else, multi-time frame radar screen. We have the 30, the 60, the 240, the daily, and the weekly. Or you could change that, right? You can make this always 30 on the first one. That's what has to stick. Make this 90. You make this 120. You make this daily. Make this monthly, maybe. I don't know. Different things you could do on this. But basically, what you have here is a way to look very quickly, right? Color-coded very quickly from right to left. I teach this all the time. I'm going to tell you again. Always the same thing out of me. Right to left, right to left. Look left. Look, 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 look left. That is the mantra that we live by here when it comes to either this, the radar screen, or when looking here. So when looking left here, I'm going to kind of try to target that. Got it right on. Right there. Look left above there. That's where you saw that gap out on the move, a crowd strike on that daily move. Above there was no resistance above those levels, and you see it kind of move up. Where's it going from here? I'd venture to say you got this little flag pattern that's growing here, right? I would sense that you probably see a little bit of consolidation in that range, kind of what you're seeing here on this 30 minutes, similar to this, before the next leg directionally. From an aileron standpoint, you got a pretty good momentum coming off a little bit. Not a big deal. Sometimes when you see that, there is this opportunity right about, you see it kind of continue to move up and gain a little bit of weakness before it makes its next move higher on this. But that's better than seeing when it is down in the negative territory and a concerning area. What's interesting about this is, you saw what is, I think I mentioned this a couple of times, these banger setups that we call it, the banger, where you have a reasonable amount of support laying on your green line here, your support line, the lower level here. And you see this kind of rotation happen, and you see that this is not, I'd like it more like this. See this right here, where we saw the aileron, which is a separate add-on to the chart of the Commander series. So this is a Commander series that you're looking at right here, plus the aileron. This momentum indicator is really good at finding these overbought, oversold areas. So this didn't really qualify as a banger. But pretend for a minute we look like this with all these magenta over here. And then we saw it basing out and then pick up and then go through. And we would kind of say, okay, that was the area. We'd pick it up. Right about here is where we'd buy. Big messy chart. We'll clean that up. So that looks good. The chart, generally speaking, looks good on this, crowd. Somebody asked me about Vertex, I believe. Yeah, Vertex Pharmaceuticals. What do you guys think of this? I'm going to hold this for a second. Take a look at this here. What? Seriously, does anybody see anything they can glean? We have somebody says ugly. Somebody says maybe it's what else do we see here? Do we see any redeeming factors on this chart at all? Yeah, I mean, here's the deal. So fill the gap, somebody mentioned. Yeah, too much supply to deal with. Here's kind of, you can keep on coming in with your thoughts on this as I kind of draw something here. Let me I always like to use, well, actually I'm going to do it differently. Let's do it with I was going to do it with a different drawing tool. Let's look at the drawing tools that we have on here. Okay, so kind of like this. I'm going to kind of extend it a little bit, but this range right here, this nowhere to go range, and it can kind of even slide it down to here. There's nothing here really to talk about. In other words, I have nothing to look at. Now, what I do have is something interesting. I do have what we talked about, which is look left. If I look left, I don't see anything. 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 Now, what I would look for is if you really want to say, okay, can you come up with a bullish argument? My answer is no. Okay, let's just get that straight. We got an aileron that is horrible. It's ugly. It is seeing some divergence. Okay, so let's put that into the camp of possibility that we're seeing that maybe some of this ugliness is going to end a little bit. Okay, let's just put that out there because that's what you're looking for. Let's make excuses. Let's make a few things. We have a short call. We're below. Okay, but you know what? We just moved out of the short, right? We got shorted down here, picked it up, closed it right about here. Not a lot of gain or loss because the gappiness of this. This is a pharmaceutical, so you'll see that. What I do see here is something. what I do see is a level of support, 188 and change or so. Well, we'll pull it up right here, cover up 188.80 on the stall, right? That's my support line. 188.80. Where are we trading now? 192 today. So I would say, if you want to take a stab at this with the idea and understanding that gaps could happen to the downside again. But if you want to, and you want to say, I'm willing to play this up to about 201 and possibly even the top end somewhere at about 206, 207 from where we are right now, which is not a lot of room for a high-priced stock. You're talking about a 10% move. Whoop-de-doo. Then you got massive overhead supply over here. You got all sorts of walls, concrete barriers in your way. If you want to do that for some reason, I don't know why, and you feel it necessary to do so, okay, and then use your level of 189 as a move out. We do not have that signal here. You won't get that signal, though, until 201, and then you really only have till about 207. So it doesn't work for me. It just doesn't work for me at all. Somebody asked, somewhere here, I got to go up the. Okay, how far to the left before the SR, supply resistance, support resistance? Not relevant. Yeah, that's a good question. So how far do we go down to 20 years? I mean, I like to find where there is levels, and you look at a chart and find where there's consistent levels where I can kind of tie across. So, it's back to October. That's a long way. I like to see where there's fattiness, and there's a lot. You want to go back on this is a daily chart as an example. You want to go back to October. I like to use the full range of a chart and see if I see any significant numbers, because really people who are investing and investing for the long term, especially if they're on a daily kind of time frame, they're looking at all sorts of numbers. Like right here, if I stop saying, okay, well, there's my support, my resistance, where do I have to? Just there. Well, if I went back a little further, this is really a really good area right here. 238. You start moving above 238, I see a nice move all the way up to probably about 257. So, I like to take all of it into account when I look at this. It really isn't, I go back. Now, how far do I go back? 6 months or so. So what is this? 1, 2, 3, 4. This is a year and change. Kind of in this range here. What is this for? So 6 months to a year, I think, is the max, probably. But again, that's on a daily. You go to weekly. That's monthly. You could do a whole bunch of stuff on monthly. On a weekly chart, that's where we are right now. Look, if you pull that up, you did see there was support there at this level 188, back to that level. Next stop, probably 182. But you have all this, again, overhead that's inside of here. I like to look back as far as I can to look at that. All right, what else we got? Let's change this back to daily. Somebody said root. Root. What is this? Root. Looks like it was caught up in that short squeeze as well there. You got some decent level of momentum to the upside moving on right here, which is good. That's nice to see. Good support at the $8.50 range. This move up to about 15 was interesting. Probably IPO'd somewhere back over here to the left. Oh, it was 28 at one point here. Wow. Not a great looking chart overall. Decent amount of momentum, decent amount of support here. I would say at the $10 level or so. Really, I'd like to see it above 13. Obviously, it's about 25% above from where we are here, which is kind of like if you had to invest, what do you do? I don't know. If you want to use it's in a green light zone right now. If you want to say, okay, below $10, I'm out. I'll take the opportunity here and see if it kind of squeezes up again. Maybe. Not loving it. Not loving it. Anybody else here? What else do we have here? Vertex. I thought I had somebody else. Oh, here. REVG. What is this? Rev Group. Okay. When I look at this, again, on a daily chart, when I'm looking at this, my eyes are drawn to this horrible gap or hole. Looking left, there's just nothing there. Now, it did hold for no reason. I can't grab it for some reason. It did hold right about here, which is kind of the top of that gap out right here. So this gap up, consolidation, across to the right, drop down. You see the momentum just fell off a cliff over here. This is just not a good time to investing. I had nowhere to go. Starting to see a reversal a little bit right here. That's interesting, which is happening right now. And, again, it's kind of a broken chart. It's not something I'm like, oh, yeah, man, I need to get into that one. Let's look at about some of the ones we've been talking about that are like, hey, that looks good. So this is a daily chart of Virgin Galactic. Right now, Virgin Galactic, where is it at? $48, right? How many times have I talked about this stock with you? We're all the way, what are we at, 48.50? Let's put it right there. That's where we are right now. Closed yesterday at about 40. It's up about 48.50. No reason this stock can't go up to 51, to be honest with you. You see this nice pattern. Look at this. Look at this beautiful, beautiful move off of the bottom. I mean, this is just beautiful starting in about May. And you had many chances to get in here. A lot of consolidation to the left, but not that much. Above this level, 32 is kind of like, hey, wait, there's not much going on. This big consolidation, again, where you could draw those lines right there, 31, 30.5, that was it. Then you said, okay, well, what about the next level, 34? Above that, there's nothing going on. There's nothing to the left. And it's been slowly but surely creeping higher. Big announcement today that they're being approved by the FAA to send people up to space. Tiger, which is up UP Tech. Again, interesting. Not the greatest momentum that we just saw that kind of blew out. Nice move here. Really, I would like to see it above, which it kind of is, above the 2681. Right now, 2758 today, which is a good sign. Very volatile. Very, very volatile. Moves at the whims of the markets, obviously. Interesting that it's up and Bitcoin's down because it has traveled along the Bitcoin range. I think this will see a nice possibility of an uptick, Robinhood IPO, etc. XLB, I mentioned this to you that we were short this, and I said that we're going to look for this to break down. It got out right about here because even though a short was called finally, it was like, you know what, we got down to some support here. They're not looking to really support this very well to break this down. How much more do I have? Another $0.50 out, done. Thank you very much. Let's collect our money. Ding, ding, ding. Go home. What else did I want to mention to you on this list here? Rad, ugly, falling, nothing good. Just ugly charts. You can see an ugly chart when you see an ugly chart. CELH. Celsius. Great fundamentals on the company. They make a drink that everybody seems to love. We actually, in our TDI managed growth strategy, owned this for fundamental purposes, blew out of it. Exactly. I'll tell you when we got out of it. Got out of it right this day, right here. This day. Is that a Monday? Yeah, this day. Right before it went up again. Came up and then came right back down. But we've been riding this. If you look at this, we rode this for a while. We rode this all the way up here. Kind of a nice run from all the way to the bottom, kind of peaked out and got out of it right about here. Passed over the resistance point, got a nice short call. Again, but everything's being bought, right? I mean, I think the big one that we look at right now, Bumble. Look at this. I think there's a symbol. B-U, Bumble. Yeah. A quick thing to do. You go like this. Go to stocks. I forgot the symbol. We're saying just click it. Just click it. Future Forex funds, bonds. Where's stocks? Here you go. Bumble, BMBL. Look at this. This had a terrible, terrible number. Kind of crapped out here, and it's just driving right back up. Earnings come out, driving right back up. Up again today, driving right back up, especially as it got past this level, that call right there, the 5038. There was really nothing to the left here. Hard to look at this only because it's a brand new stock. Space we talked about already. Tiger we talked about. KBH. Somebody answered. Oh, Workhorse. Yeah, Workhorse. So one of the themes that I've been going with right now is, hey, could we find stocks that have, if one thing goes right, just one thing, the stock will do well. Now, this got caught up in an interesting move recently off of the bottom. You can see all the lines here. We only use this for our webinars on Fridays, this TradeStation system. We've been marking all this. You get above this level here, right? This level right here of 1629, currently trading at 1566. Off to the races potentially right here. Little bit of overhead. Really, my line right there, get past that 1808. You're pretty, well, let's kind of move it up. Always fudge it a little bit. There you go, just 10 cents. 1818, great shape for the upside. All they need is one thing, in my opinion, which is possibly they are suing the government right now. Get a deal for the post office. So there you go. Hey, thanks for joining me. Make sure to check out everything over on TriggerCharts.com. Check out the trading app store, etc. And you have a profitable day and a great weekend. Thanks so much for joining me.